Hi and welcome back to Cheeky Crypto. Today, guys, we're going to be jumping down into the world of Bitcoin, taking a brief look at what has been going on most recently with the price action and what I would expect to happen next. As I get into the video, if you find it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Now, I'm still under the weather. I'm going to try to get through this without coughing too much, so I do apologize if I fail to edit out any of the coughing that does occur in the videos. But yeah, we'll try to keep this nice and brief, keep it concise, and keep it to the point when it comes to BTC. So let's go ahead and make a start, right? So Bitcoin paired up with USDT on the hourly chart here, and Binance is our data source. And what we're doing is we've been seeing a corrective move to the downside, and we kind of had this kind of scoped out at around that 23,250, I think it was yesterday, approximately, just when we noticed it wasn't really a classification of five-wave move. And we did come up quite a bit here, so we came up, we came back down, and then we're starting to get back up again here. And what's really interesting about these recent movements with BTC is we need to understand, is this a flat correction, or is there something else going on here? Is it just a minor three-wave correction up, and actually we've got to come down a bit more, and all that kind of stuff? Now, we are overbought on our 1 hour chart here on the stochastic. And again, this is something that, you know, we expect a little bit of volatility over the weekend. We do expect, obviously, the market as well to be quite slow, right? It's low volume over the weekend and all that kind of usual stuff. So we're not expecting massive movements or anything like that. So I do expect, you know, we can see how we went from oversold to overbought without doing too much in the way of price. I mentioned the same thing, but in reverse, where we go up from the overbought to the oversold without doing too much to the price either. We can see that we have found support on the 200 EMA level on the hourly chart here. And we have just broken above the 50 EMA, which was previously a resistance line. So you can see how we were kind of getting sandwiched in here, and then we're trying to break to the upside a little bit, but we now are overbought. On the 4 hour chart, we're not overbought. So again, this allows us to kind of think there's still upward potential here. And again, same with the 8 hour or even the daily chart shows some potential for upward momentum, and therefore slightly higher in price. So we can kind of keep an eye on that. Now let's go ahead and take a look at whether or not we are in fact in a flat correction. Now, all flat corrections must end in 5 waves, right? So if we come up here, we come down, we'll be looking for 5 waves to go up to kind of complete out our structure. So let's go ahead and just pull this on and take a look at our current position. So no, we're not anywhere near where we need to be to kind of make this 5 waves. This kind of means that we're probably not in a flat correction, at least not yet. 23,689. The 1.618 would allow us to then look at this and think maybe we are in a flat correction. But there's a couple of things here that are probably worth noting. So the first one will be that this wick just up here is really high compared to where this wick was. Okay, so we can see that there's no way that this can be 5 waves going up here. Even a diagonal is pretty much invalidated, because you can see there's overlap between these 2 wicks in here as well. And you know, you don't reach any of those good fib levels. So I'm inclined to think that is not what is occurring here, and basically we're just in some kind of corrective structure. Now, if we are in a corrective structure here, then we've kind of already met our requirements. If I pull this back over, you can see that we just got rejected from the 1.236, and now we're moving down. So from here, we might see 3 waves going to the downside. So let me go ahead and draw these in. All right, so we can see A, B, and C going up. We can then also see that we move down. We've got a couple of different options here. I'm going to take this mid one and pull that down, so we can have that kind of 3-wave structure there. We then also have this 3-wave structure taking us up here, which basically means the next moves are more than likely to be down. Okay, so these might be brief though. I'm not expecting massive movements to the downside, but we can see here that momentum has been shifting to the downside for a fair few hours now, ever since the 2nd of February. So we are losing ground here, losing coverage, but at some point I do think things will line up and we'll move on up. Now, all of this could be, you know, misconstrued as maybe a bit more bearish, and maybe what we have to do is actually move on down just a fraction. Let's go ahead and take a look. So we could be targeting out 23. 23 would be an interesting place to kind of think about. It would put us in some kind of A, B, C structure like this. So that could be interesting to keep an eye on. But yeah, the next move is down in my opinion. 23 would be an interesting number if we can hit that. That would mean losing the support level of the 200 EMA on the hourly chart. Okay, so as you can see, the stochastic is high. If I take that off and throw the volume profiles in, you can see here there's a little bit of a bump to the volume to the upside there, but the volumes still are on the decrease. And again, you know, we can take a look at some of this stuff and really kind of get concerned between these two levels, specifically when we have this peak here and this peak here. Again, volume is decreasing. We haven't gone up into a higher high, so there's no divergences there. This can be confirmed by using the divergence indicator. There's actually a bit more bullish divergence right down at the bottom here, but I feel that move's already played out on this smaller time frame. The RSI is moving up on the hourly, but again, not too concerned about that. Let's jump over to that 4-hour chart. 4-hour chart does show progression to the upside, but I think before we can move up, we're probably going to have to correct down first, but keep an eye on that. Ultimately, we are in a very overlapping corrective structure here. Okay, this is as I said before, like could potentially be an ending diagonal structure, and all we're doing now is kind of playing out the last kind of movements before we can kind of put this to bed and move on. Now, higher highs and higher lows have a tendency to break down. We know this. They tilt upwards, essentially like this. But again, nothing concrete and a lot of things to be kind of concerned with overall when it comes to the price action of BTC here. So again, looking at it, we're finding support on our 50 EMA. Our 200 EMA is down here, so we've got some coverage on that 200 candle EMA, which is good on this 4-hour chart. So progression upwards, I think, is likely, but just brace ourselves on the hourly corrections before we continue running up. My expectations are that we do eventually move up into the $24 to $25 range, or $24 to $25,000 range, which is the yellow box area here. We briefly entered it into it once. This is where a lot of sellers are. This is where a lot of liquidity is. So my expectations are that we will eventually move back up into that range before we do fall on down, because I do think there's going to be a bigger corrective play that we're going to have to experience. Now, on the daily chart, you can see the higher highs and the higher lows quite clearly, and I've spoken about these before, where they tend to have a tendency to break to the downside. We're oversold, so we can push up into that $24,000 to $25,000 range, not a problem. We're above the 200 EMA and the 50 EMA, so it's all good. Now, if I throw the volume profiles in here, you can see the volumes are not looking great. Price action is going up, whilst we are seeing lower volumes coming through. Okay, so we're running out of momentum as we are pushing up. Throw in our divergences, and you can see right in here, this is what I've been talking about for a little while, was the bearish divergence. The bearish divergence was the fact that we were setting ourselves up with higher highs in prices, but the volume profiles were moving down, or we had a lack of momentum shifting us to the upside. Now, then recently we've seen some bullish or hidden bullish divergence in here as well. Okay, so we want to be aware that there's still a potential move to the upside here, and the hidden bullish divergence right now does trump that of the bearish divergence, but technically I think both are in play. We have a short-term move up before the bigger pull to the downside. So just kind of bear that in mind. This market is incredibly volatile. It is incredibly unpredictable at times, and very, very difficult to read. Okay, you can kind of be led down the wrong garden path very, very quickly when it comes to charting up things like Bitcoin at the moment. Okay, so now that's happening on the daily, and when we jump on over into our weekly, we can see that we're overbought. We're finding the resistance on the 200 weekly EMA. We are below both the 50 and the 200 EMA. So on our weekly chart, we do still remain very bearish. There's no bullishness to be found here on our weekly chart, for example. Now, we're not trending to the upside from an Elliott wave theory point of view as well. It's a very similar scenario that we were talking about previously, where there is no 5-wave structure here at the bottom. So we cannot and will not and should not draw something like this: 1, 2, 3, 4, and 5. That is not the correct structure. It is not a 5, 3, 5, 3, 5. There is no leading diagonal. There is no 5, 3, 5, 3, 5 in wave 1. And there is no reason to think that that's a 5-wave structure. Instead, it's a 3, 3, 5 regular flat correction. And our 5-wave structure is right here at the very end. Okay, and I think we're in the ending 5th wave diagonal of that ABC structure. Okay, so yes, it's an overextension ABC, and that C wave seems really irregular, but it is driven from a DXY essentially. Now it does look like 335 to me, because that actually would meet the requirements, but the 53535 impulsive 5-wave trend structure is not a thing here. That is not what we're seeing. So we want to be very aware of that. Not only do we couple, a lot of what's going on with the on-chain metrics that we talk about pretty much every day on the live streams, but essentially here, when it comes to our weekly chart, it doesn't look and doesn't give us the confidence. Not only are we overbought, we have got some interesting kind of data points where we're seeing rejection. Okay, now I still think we can push up, at least wick up into that $24,000 to $25,000 range. You can see this is a previous area from the August 2022 highs, where we were rejected from the 200 EMA back then. I think a wick up here before pulling down is something that we should be kind of ready to be prepared to experience. I don't think we're going to get a weekly close above the 200 EMA this week, but we'll see. It's currently at $23,709. We'll see how that kind of plays out. Now, if I remove the stochastic, throw the volume profiles in, again, we get the very glaringly obvious, which is that volumes are on the decrease, even though we have gone up into higher highs right up here. So again, this is a divergence between the volumes and what the volumes are indicating to us versus what the price action is telling us. We know that there is very little volume pushing this price up higher. And even if we were to remove the anomaly of FTX, because people don't want to kind of think about what it is, we can still see week on week volumes are decreasing as price is pushing up, even over the last 1 month period. So just bear in mind, not looking great there. The RSI is obviously moving up a bit as well. So again, interesting kind of viewpoint from that perspective. But overall, I do think that the weekly chart gives us a glimpse as to what we should be expecting to happen over the next several weeks, which in my opinion would be downward price action. A good correction is due. From our Wyckoff accumulation patterns, everything's still in play. We're still waiting to see whether we're going to retest the lows at 18,626, break those, and then go down into a spring event, or keep on those support levels, bounce from those, no spring event, and we move over into phase C. All that is still in play, unless we move the price up higher than 25,211. This is the only place I can see at the moment that a Wyckoff accumulation pattern fits. Failing this, of course, we could be looking at maybe we are actually yet to have a phase B, and this could just be our initial kind of move up in just above the automatic rally, for example, before pulling down into a secondary test in phase B, which is a possibility as well. But other than that, it is what it is. I'm not too fussed as to how whether this plays out, but I'll leave that one there, and we'll keep it up to date. I'll keep it up to date as time progresses. I'm going to actually leave this video right there, though, guys, before my coughing fit starts. If you have found it useful and informative, smash that like button. Do appreciate that. Subscribe, tap the bell, and stay up to date with everything that we do. And of course, join us down in Discord if you haven't done so already. Until the next one, though, guys, have a fantastic weekend.